Hello and welcome to Market Views, a podcast series of Open Business Council and JPFS, where we discuss financial and trading news, interviews with key personalities, and engage with our audience. Now, today we have special guests, Richard Winterbourne, the Commercial Director of Scot H2, and Steve Saunders, a Director of Arab. Welcome, gentlemen. And so, over to our co-host, Adam. So, Adam, can you tell us a little bit about Renewable Energy Project and what makes it the first of its kind in Europe?
Thank you, Hilton. Yeah, I would be delighted. We are very, very excited here at JPFS and our sub-brand trade makers to be able to bring this to a much larger audience. This is really the first of its kind in the renewable energy space. We've taken the basic concept in finance of fractionalization, so whereby investors who normally would have to invest $100, $150, $200,000 or more to participate and to be professional investors, we've taken away all the barriers to entry. And now for a base level of £5,000, they can invest in this new project. And in most of our projects, we all start at around the $5,000 mark or £5,000 mark. What makes this project so exciting, and what makes, I think, Peter and I especially very, very thrilled to be sharing this with you guys, is that this is going to be the largest liquid hydrogen project in Europe. This is really bleeding edge stuff to make sure that we can help the UK and the rest of the world, meet Elon Musk's challenge and accelerate the transition to renewables. The whole concept of it is very, very simple, but there are people on this call who are far cleverer than I am at explaining it. But in principle, we're taking wind generated electricity. We're creating liquid hydrogen from that. So there is no fossil fuel involved. From beginning to end, the whole thing is 100% clean, green, renewable fuel for the future. This target audience for us is going to be within the transport sector space, the end users. We've already got a lot of interest there. So, it recently launched 2 days ago. We put the proposition live, and the response so far has been overwhelmingly positive. People love this idea and love the fact that they can participate in the fuels of the future for £5,000.
Fantastic news. So, Richard, can you explain how liquid hydrogen can drive the adoption of renewable energy for the transport sector?
Hilton, I'd be delighted. Thank you very much. The major difference by having liquid hydrogen, it gives us much more flexibility within the transport industry. So as technology is moving forward, there are already trains, there are already buses, taxis, numerous cars, heavy good vehicles that are beginning to work with fuel cells powered by green hydrogen. The difference that we've done, the reason that we've gone particularly for liquefied hydrogen, is because it makes it much easier to transport, much easier to store, and then much easier to use as an end fuel. So I'll give you an example. If you had a car and you had an electric car, you would be plugging into electricity. If you have a diesel or petrol car, you're putting that fuel in. What's happened at the moment is there are fuel cells that can drive each of those different vehicles, but it's also getting to the point now where we have combustion engines that are being designed specifically to run on liquid hydrogen. So again, you can go into a petrol station, you can fill up in exactly the same way as you would have done before. Now that's a fairly exciting prospect as we look across all of Europe. They're beginning to do it in a much bigger way than we are at the moment, so we're a little bit behind on this. But I think as far as the transportation industry is concerned, yes, we have cars, yes, we have heavy good vehicles, and that's really important. And trains, as I say, and buses and taxis are already being done. But this also opens up a huge opportunity within the marine industry, because the marine industry as well is one of the dirtiest in the world. It's a huge polluter. So we're very, very keen to be able to utilize this potentially at ports, potentially be able to use in the longer term for maybe smaller boats, smaller ferries, and potentially ships as time goes on, but also to be able to fuel some of those ships and cruise liners when they're sitting in at the docks, and rather than spewing out filthy diesel while they're sitting there, we can run that electricity from the shore straight to the ships, which cleans up everything very, very quickly indeed. So we're very excited about that.
And what could it mean for the UK's energy independence?
I'll give you a small example. We are looking at microgrids at the moment for something like ports. We can do that for housing estates. We can do that for towns and companies. It's only a matter of expanding that out. Now, that's going to be about the amount of energy that we bring into the country. So if the more wind farms we have out at sea, and obviously both on the east and the west coast, that's expanding hugely, it gives us a great opportunity not to have to rely on gas, fossil fuels, and coal from abroad. And as we know, we found out very sadly in the last year or so, that impacts on everybody. It impacts on prices. We're in the position to be able, if we can produce enough energy at sea and on land, we can produce enough green hydrogen, and that immensely flexible fuel can mean we can do all kinds of things with it and give us much greater independence.
So, Steve, can you explain a little bit about Arup's involvement in Whitehill and how does it support the Scottish government and local authority?
Yeah, of course. So Arup have been involved with this project for probably over 5 years now, from concept going through supporting Scot H2 with the development of it. And we're very excited to get to the phase where we're actually really starting to talk about bringing this project forward to fruition and delivering on it. So the importance is that with renewables that Richard's talked about, the immense amount of renewable energy is flexible, and that at times produces too much energy. As we know, we've had to curtail curtailment payments to wind energy companies to turn off when they should be generating, the same with solar. So using that energy and not wasting it is key to developing this. And hydrogen is a great way of doing that, in capturing that energy and turning it into a really usable fuel that is, supports the local and the national economy, as Richard said. So within the sort of Scottish government, their policy, is to have 15% of Scotland's energy derived from hydrogen fuel by 2030. I mean, that's a good some target to go for. Without the likes of Whitehill, that's just not going to be achievable. The potential pipeline of wind energy is over 40 gigawatt of energy. So there's going to be lots of energy around, and getting that into the energy vector is really important for delivery and sustainability. And it gives you that flexibility. The liquefaction part is fairly new to the UK. In Europe, they're much more advanced in liquefaction, and in the States, and bringing some of that learning to the UK to do that. And the advance in technology means that's more efficient than it has been, and therefore makes it much more profitable for the users to do that, rather than taking vast amounts of land by storing it in a gaseous form.
That's very interesting. So Arup, I presume, is much more on the infrastructure and delivery side of the equation in terms of the potential as a renewable energy source using hydrogen.
Yes, yeah. I mean, currently working obviously with Scot H2 on delivering the planning application for the project, and the local policy, is supportive of the development, which is important. The position of Whitehill is such that on the grid, you couldn't connect the wind turbines to the grid because it's unable to take that amount of energy. So using that to create hydrogen is, makes perfect sense in terms of, a green economy.
That's very, very interesting. So, Peter, can you tell us a little bit about how JPFS has fractionalized this project, and what are the costs and the potential returns for investors in terms of investing in renewable energy?
Now, I have to say, with what Adam was saying in the beginning, pretty proud to actually be a part of this project, because it's the biggest in Europe, and it's first of its kind in a way. Because we got licenses in 3 different jurisdictions, it means that we have the possibility and the skills, or not the possibility, but we actually have the skills, and we got the facility to create an instrument for investors to participate in projects like this, where normally, as Adam was saying as well, it's £100,000 that you have to come up with, which is a good amount of money. Now we actually give the facility and the possibilities for ordinary investors to participate all the way down to 5,000, which of course there's always risk if you don't get the permit and all these things. But you actually can invest down to £5,000 or £10,000. And as Adam also was saying, we already got the first investment coming in. We're putting up just around 6% of what needs to be funded of our own money as well to participate. The way that it works I would say estimated takes around between 12 to 18 months before it's done and we can sell the planning permissions. We've done the calculations on the investments. If it's sold for 15 million, the clients will make just around 100%. If it's sold around 30 million, between 25 and 30 million, it's above 200%. The way that works is the value of the planning permission is approximately 1 year's earning of the project itself. And that's how we actually come to these results. Doesn't cost anything to participate. The risk is, of course, the capital that you place into the amount or into the project. And that's more or less what we've done.
Thank you, Pete. That's very interesting. So, Adam, can you explain how investors can learn about Europe's largest wind and liquid hydrogen project and invest in it, going through the whole process from the planning permission of the projects themselves closer to the construction and then the exit?
Absolutely. I'd be delighted to. As Peter mentioned, this is a two-phase project, the first phase of which is the capital raise to put the project through planning. We already had the full support of the local and central government, so we're anticipating a fairly smooth ride. But all of the information about the project, this first phase, and more information will be released as we go forward. But the information can all be found on trademakers.com under our investment section. There's also a very detailed presentation that potential investors can download and review offline in their own time. The opportunity, if when investors are ready to make their investment, is through our partners at SGT Markets. They're a custody and execution partner that we work very, very closely with. So the account would need to be opened up through them. The usual KYC and AML procedures are adhered to so that everything is fully transparent. And once the account's opened, the transfers can be made, and that secures that the individual investors or group of investors can then participate in Europe's largest wind to liquid hydrogen project.
This video podcast will be published on openbusinesscouncil.org website and associated channels like YouTube and podcast platforms, which already have received more than 14 million views. Now, thank you, Steve, Richard, and Peter, and Adam. And we very much look forward to our regular podcast on market views next time. So do follow us on jpfs.com and openbusinesscouncil.org, and please engage with us on these links, and as well as on LinkedIn and Twitter. And do send us questions for our next episode. Goodbye, and thank you for watching.